Welcome back, folks, to Dirty Boots Capital. Today we have the amazing Gino Barbaro with us today. You know him from Gino and Jake. They are very famous out there with their coaching platform that they have to help folks get into real estate investments. They're super successful. How much do you guys own in real estate now? Are you up to half a billion dollars?
Thanks for having me on. First of all, first and foremost, I love the title of the show, Dirty Boots. Every time Jake goes on a property tour, he wears his duck boots. So that's the first thing that popped into my mind. Because when you're doing the business, you're going to wear some dirty boots and you're going to get dirty. And if you don't get dirty, you ain't doing the business. But
That's
I
right.
digress. We've transacted on over 2,200 units. We currently own 1,700 units. I think it's around 350 or $400 million in the assets under management. We're vertically integrated, but more importantly, the student base has done over 80,000 units at Jake and Gino. And listen, they've raised over $450 million. So it's really, I think, a testament to long-termism. It's testament to a commitment that multifamily is a business. You're an entrepreneur. From the very first deal you buy, whether you're buying a duplex or you're buying 150 units, you're buying a future stream of revenue. Once you understand that, you should get really excited and you should try to buy as much as you possibly can.
And I love what you guys teach. And I was just sharing it on another podcast just yesterday is, I encourage, like you encourage folks to buy their first property themselves, right? Get into buying, it could be a single family, it could be a duplex, it could be a quad, whatever it ends up being. But you actually know through that experience, you get to know the process. You get to feel the pain points, right? You need to understand how to structure the business, how to deal with tenants, how to deal with contractors, right? You get to know how to run the numbers for your cash flow to make sure it's a business. You got to make sure that it's cash flowing. So as you do this, you get so much knowledge such that when you decide to grow and then become a limited partner in, say, a syndication and inside a much bigger deal, man, you are coming with such a massive amount of knowledge from having your own property. That's such that you're starting to ask some really good questions. Like I run a syndication and, I have some investors who ask me some really hard questions. And I'm like, you must own multifamilies already. And chances are they do. That's what we come
Yes.
across. But what we want to talk about today is, you get this question a lot, and I get this question a lot is, how do I buy my first deal? Walk us through today what you're seeing today in the environment. What type of asset would you recommend for somebody who's maybe 20 or 30 years old, looking to buy their first multifamily? What type of asset should they buy? How should they go about getting financing? How should they go about doing property management? These are the questions people want to have answers to.
I'm going to sound like an asset protection attorney right now. And my answer is it depends.
Okay.
I think the very first thing is it depends is where are you as a person coming from? What's your relationship with money? Number one. Number two, have you ever invested in anything, whether it's stocks, bonds, or are you just a worker collecting a paycheck? Because the mindset is completely different. When Jake started, he was a W-2 employee. His first deal that he did with me completely blew him away. I don't know if he would have been able to do that by himself. Now, I'm not taking the credit, but I did have a lot of the experience. So the first thing I want you to do is, if you're listening to this, where are you starting from? What are your goals? Are you looking to buy your first deal? Are you looking to buy your next deal? Are you looking to do it by yourself? How much time do you have to dedicate to learning? Because it's education times action equals results. Education, action, and then why I like the mentorship programs, it's implementation. You need to learn how to implement everything. And it also comes down to what markets you're investing in. Do you want to do this full time? There's a lot of people who join Jake and Gino who love their jobs, but they want to have the autonomy in 10 years to say, hey, I don't like my job anymore. I've got collected 500 units. I can leave. So these are all questions. As you're listening to them, I'm hoping you're writing them down. And if you haven't, go back and listen to them, because this is about you, about what you're trying to accomplish. I can't tell you what I want, what my goals, what my values are, what my objectives and beliefs are, because I have a different belief system than what you have. But really go back and think about what you're trying to accomplish. If you're just trying to buy your very first deal, you can be in your 20s. I would house hack. I would absolutely go out and buy a duplex or a triplex, live in one of the units, rent out the other two. And if you're in that process and you hate people and you hate real estate, well, you're okay because you can always sell that asset. But chances are, once you've been living there and you have those other two units paying for your rent, paying for your mortgage, the light bulb should probably go off and go, how do I get more of this?
Yeah.
That's the important thing. Now, in this part of the market cycle, there are market cycles. When I started back in 2011, very similar to what's about to transpire right now. It was harder to raise capital. Capital was pretty much non existent back then. Rates were
Yeah.
a little bit higher. The economy stunk
Mm,
and there were deals on LoopNet. And that's what's going on right now.
yeah.
Go on LoopNet in your market
Yeah.
because brokers have these deals that they can't sell. So they're throwing them onto LoopNet and onto Crexy and onto
Yeah.
auction. So if you're saying to yourself, now is not the right time, I would challenge you and I would say to yourself, now is the absolute perfect time to get into investing in real estate because you need to create relationships, you need to
Yeah.
get the education, and the markets are always shifting. You can always buy real estate, Tony. You can't always sell it. And now in this part of the market cycle where we're going back, it's a lot harder to refinance, it's a lot harder
Yeah.
to sell, but there's going to be opportunities in this market cycle.
So you talk a little bit about, if somebody's looking to get started, maybe buy a duplex, maybe do some house hacking, maybe get started that way during these kind of cautious times. We like to be a little more cautious these days. What about financing? How could somebody go about getting financing for a deal like that?
Great
Great
question.
question.
And to your point, why should we only be cautious in these times? We should always be cautious and conservative. And the problem is when you have 0% interest rates and you have private equity and all this cheap capital coming in, we become less cautious. And it's
Yep.
part of the market or interest rate cycle. We need to learn history. And I think if we had learned history, for those of us that were around in '08 and got burned, I learned my lesson. That's why I was a little bit more conservative. I knew that 20% rent growth wasn't going to last forever. I knew that insurance and inflation was here and all of these expenses were going to grow. So if you're looking at financing, there's a couple strategies in real estate. The first one is seller financing. Learn how to creatively finance deals, especially the smaller deals. Jake and I have been able to creatively finance over $20 million in seller financing, whether they're seller carrybacks, full seller finance notes. We wrote a book called Creative Cash. If you want a copy, email me, Gino at jakeandgino.com. I'll send it over to you. It talks all about creative financing. Listen, we did a creatively financed deal last year where the seller took back $450,000 as a seller finance note, part of the down payment. Great way to get into it. And it's going to become more prevalent in this part of the market cycle because financing is becoming more difficult. There's cycles. When Jake and I started, our very first deal was seller finance. We had 10% of the down payment. The second point is what Dirty Boots Capital is all about, syndication. That's another tool. So you have seller financing. That's one tool in your tool belt. Let's pull out the other one, which is syndication. What I just said before, it was difficult to start raising capital when I started. Now, raising capital can be a bit more challenging because we're seeing the capital calls, we're seeing the foreclosures, we're seeing that LPs like to huddle together around the water cooler and say, Gino's capital calls, my deal's not going good. And all of a sudden the fear spreads. But syndication, it's going to pass. There's still a ton of capital out there. If you've got a great opportunity, you need to start talking to investors. And you can also go and find somebody like Tony who has a great deal, jump on his team, provide value, not only raise capital, get on his team somehow, but also maybe partner with someone like a Tony or someone who's an operator and start helping them build their portfolio where you can be what they call a co-GP. Great way to start. I had no idea how that 15 years ago. What does that even mean? Until I started
Yeah.
raising capital. And that's a great tool. So you've got seller financing, you've got syndications, and then obviously joint ventures. You don't have to buy a 30 or 40 unit deal on your first deal. Buy a 7, 8, or 10 unit, partner up with one or two other people.
Yeah.
Start doing that. And what we like right now, we're using credit unions for financing. Credit unions have really good rates and interest rates, really good terms. Community banks, they're a little more challenging. What's going on with the banking environment right now? You have banks that, have to go out and lend at the federal funds rate, and they don't have
Yeah.
all the deposits. So it's challenging for them to compete. The agencies, they're great. Rates are still high. They're looking at 60, 65% LTV. So you need more capital as a down payment and maybe a little bit more challenging. But that's what we're doing. Syndication, seller financing, credit unions. That's what we're focused on for the finance right portion.
I love that. If folks don't realize, go back, rewind, watch this like 6 more times because what Gino just shared is just blows my mind because there's so much so much in what he just shared. So, but I want to double back on a couple of those things. One of the things you mentioned was networking, and in real estate, for folks, listening or watching, networking in real estate is everything. It's who you know, right? Who you know to find the right deals, to find the right financing, find the right property management team. Networking is huge, right? So you got to get out there. You got to get to your local real estate investment clubs or associations. You have to go to conferences, right? You need to be, on social media, just chatting and following up with like people in your local community, right? You don't have to go across the world to find these folks, right? They're right in your own little community. Why not leverage that, right? Go meet up for a cup of coffee one day and just chat about what you're trying to do.
If you're an introvert, Tony, and I can classify myself as, they call him an ambivert. When I need to be really an extrovert, I'm out there. I can talk to people. I love the energy, especially if there's a topic I want to talk about. I love it. But I'm also introverted. We can use that as an excuse. I used to be the guy. I started my career in the restaurant business. I had one restaurant, family restaurant. I was the guy who worked in the kitchen, washing dishes, hiding from everyone. So if you're out there telling me you're an introvert, listen, I am the classic introvert until I felt enough pain to say, how do I change? So if that's your excuse, I get it. Get on LinkedIn, start connecting with people on LinkedIn. If you're looking for real estate in Nashville, Tennessee, go on LinkedIn, find out all of the brokers on LinkedIn. Google multifamily brokers, go opt into their
Yep.
lists, start getting on their lists,
Yeah.
start getting emails from them, start talking to them about their deals, and start connecting with them on LinkedIn as well. There's tons of people out there. And my advice to you would be to create a business plan, create what you're trying to buy, focus on the real estate broker who has that, and then start focusing on other industry experts or team members, property management companies, title companies, attorneys to do closings. You have inspectors, you have appraisers, all of these different people. But the real estate broker, if they're knowledgeable and they're great, listen, I'm going through a transaction right now. I'm buying a home right now here in St. Augustine, and I have a residential broker. They really get the short end of the stick because this lady, Maureen, is phenomenal. I've asked for 15 different resources, whether it was a well inspector, septic company, electrician. That's what a real estate broker should be. They should be the conduit. So when you're there, you're talking to the brokers. Don't be afraid to say, "Hey, who are your lenders? What community banks are you using? What property management companies can you go out there and recommend?" That's the key. But those brokers are key. So once again, go on Google, multifamily brokers in your market, start opting into their lists. They're going to start sending you crappy deals, and that's okay. You're going to want to start doing property tours on those crappy deals just to talk to the brokers, to build rapport. It's going to take a few months, and that's okay. And then before you know it, you're going to connect with one broker. That broker finds a 20 unit. They're going to give it to you off market because they liked you, because you're not a tire kicker. You're not from California just looking for deals. You're actually out there. You're a real person.
Yeah.
And the reason why I said to you before, why now is the right time, well, brokers ain't that busy right now. So if they call or you sign a confidentiality agreement, you're probably going to get a call back in the next 20 minutes. Whereas 2 years ago, good luck. So there's a lot of things that are really happening that I think to me are positive in this environment for investing.
Yeah, and put into work, right? If you have a broker that sends you a deal, and say it's a 10 unit, right? And say you look at the offering memorandum or the MLS listing, whatever it is, and you kind of like, I don't really feel this one, right? Nonetheless, run the numbers. Do what we call your underwriting, right? If you have your own
Yes.
spreadsheet or if you purchase a spreadsheet, whatever it is, do the underwriting on it. And then go back to the broker and say, hey, I did the underwriting. This is what I like. This is what I don't like. It doesn't turn out to be the right property for me. What that shows the broker is this person is serious. They actually ran the numbers. They took the time to do the underwriting and really seriously study this property. They're a serious buyer. Let me send them another property, right? That they may have, like a pocket listing or something that, that they may have or just receive. Do that legwork, right? Take the action, right? Gino, you talk a lot about action. I talk a lot about action. These things aren't going to, be knocking on your front door, to present themselves to you, or they're not going to show up in your backyard. You have to go out and get them. You have to take action. You have to go network, go to your real estate investment club, right? Go onto social media. 20 years ago, when I started in this, I didn't have social media to
By
network and
yourself.
fall back on. And I'm an introvert. Folks say, Tony, you're not an introvert. You're an extrovert. I go on stage, I speak, I do my podcasting, I do all my other stuff, right? They're like, you're not an introvert. Let me tell you, I took the Myers-Briggs type indicator test, and many folks know that test. It's a very lengthy test. It shows whether you're introvert, extrovert, judging, sensing, gives you kind of like get to know who you are, how you tick.
Hmm.
And so it pegged me as an introvert, which I know I was, off the scale. Gino, I am an introvert off the scale. But I know, like
Hmm.
you, I need to turn on that extroverted side of me when I need to, right? And if I
Hmm.
want something, if I want to become a real estate investor, and I need to turn that on and go out to these investment clubs and do different things to be able to achieve what I want to achieve in my life.
Let's keep this thread for one more second with the
Yeah,
brokers because it's really important. Because if you're working a job and a broker sends you a deal today, I don't want you to say, you know what, I got a job, I'll get to it in 3 days. Your duty is to underwrite that deal and get back to the broker as soon as possible because you do what you say what you do. The broker is going to take you seriously. And if the broker is asking $1 million and you can only do 600, you can say to the broker, hey, Mary, I love the OM you put together. Pictures look great. Marketing's great. I love the numbers. It's just, listen, I'm at 600. You're at a
yeah,
million. Should I put in this offer? Mary may say one of two things. Listen, you're a little bit off. Let's wait till the next deal. Or she may say, you know what? The broker, the seller, I've been telling him that's what it's worth. Let me put in the offer. Just
yeah,
ask them permission. Compliment them. Don't tell them the property's overpriced. They know that. And years ago, they would say, you know what, Gino, thanks. I got someone else
yeah,
behind you.
yeah,
That's how you build rapport, being honest with them,
yeah.
doing what you're saying you're going to do, and get it over to them as quickly as possible because these opportunities are rare. And we were speaking before we got on camera. If you do one or two of these deals a year, by the time you're at year 4, year 5, your life is completely transformed. You
Huge.
don't need 3 or 4 single family. You need 1 or 2 multifamily deals a year. And before you know it, your life is completely transformed.
You're absolutely right. That happened for me. I mean, I was sharing that with you, right? I retired when I was 44 from the corporate environment, and that was through buying a quad, a duplex, a triplex. I wasn't buying, apartment complexes, right? I didn't come from money. I label my company Dirty Boots Capital, Dirty Boots for a reason, right? Because that's where I came from, very blue collar background. And so, yeah, you're absolutely right. I did it. And over 10 years, I was able to amass enough 30 units allowed me to retire when I was 44 years old. 30
Mm-hmm.
units. This is very doable. You
Mm-hmm.
teach it. I teach it, right? This is a very doable thing, right? So we went through, and there's so much we can cover here. I took a bunch of notes from you were talking about everything from networking and just finding your why. I think that's huge. One of the first things I do with clients is I start what I've called a real estate personality test. I ask them a series of questions to help them understand their why. A lot of times, people come in because they want more cash flow. And I get it. That's primarily the reason we get into this. We want more cash flow each and every month. But there's usually some underlying factors. And one of the things I share with folks is a client of mine, husband and wife, who came into it. And we went through the real estate personality test and come to find out legacy was their number one why. And so we get into it, come to find out they have 5 kids. 5 kids. Legacy is very important to them. They want to get into real estate to how to create cash flow and to create more cash flow for themselves. And that's very noble and that's great. But more importantly, they wanted to learn real estate in the process and how to do this because they want to teach it to their kids because
Mm-hmm.
they know how important this is to have something other than a W-2 job for additional cash flow to be able to be protected, to have some financial freedom, to have some financial knowledge. This was so big to them. So to understand your why is huge. And you guys go through that. I go through it. Yeah. So spend some time for our listeners and people watching out there, spend some time trying to figure out what your why is. And if you're struggling, reach out to Gino, reach out to me. We'll have a conversation, help you figure that out. So we
Mm-hmm.
spoke about the asset type for somebody who wants to start getting into this. Maybe they buy a duplex or a house hack, something they can afford, and figure out, make sure it resonates with your why. We spoke about financing, a lot of creative ways you put out there. That's huge. Not everybody comes with money, but you know what? There might be somebody who's like, I'll say more handy, more like on the side of blue collar where they can fix things, but they may not have the cash. Well, you know what? If you have a good rapport with your CPA or with your attorney, they may have cash, but they don't have what you have in terms of being able to fix things, right? Do landscaping, do a little masonry. They don't have that, what you have, but they have money. So why not partner up in an LLC or a joint venture with your CPA or with your attorney and say, hey, let's go do a deal together. How beautiful is that? It's a win-win. So we
And
spoke.
Jake and I started that way. It's important that people understand that he didn't have a ton of money. I had more money. He had the sweat equity. He decided his
Mhm.
value proposition really was the property management. He wanted to manage these assets. And if you're out there trying to think, how do I start? Well, where is your value? I have students who all of a sudden say to themselves, property management in multifamily is challenging with third party, but I can become the property manager. I can charge 3 or 4 or 5% of gross rents collected, gross income collected, but then I can also get equity in this deal as well. So what you need to do, once again, assess the value that you can bring. Are you great at raising capital? Do you love talking to investors? That's a great way to get on a team. Are you great as a maintenance lead? You love to do flooring. You love to take care of that aspect. That's another great place to do it. Are you an asset manager? Do you love budgets? Do you love
Mm.
spreadsheets and numbers? You love underwriting? That's another way to get into this business. Multifamily is a team sport. You can
Yeah.
start doing it by yourself, but at a certain level, when you get to 100, 150, 200 units, it can become daunting. There can be
Yep.
multiple tasks and you need to start expanding your team. So start looking for people who can add value to your business and you can add value to theirs as well.
So as far as that property management piece, if somebody's, they're buying their first one or their second one, they can probably handle it. But for folks who are saying either I'm buying my first one or my second one, and I'm not really cut from that cloth of being a property manager and doing that sort of stuff, what are some pitfalls to avoid in terms of finding a property manager or hiring a property manager? How should somebody go about doing that?
If you're serious about the business and about the long termism, you're not going to like my answer because my answer is you need to hire an education company or a scaling up company that deals with it. Because Jake and I were at 500 units and we're busting at the seams. We have crappy property management software. How do you scale an organization? And we didn't know how to. We had to go through traction with EOS with Gino Wickman,
Yeah.
and we went with scaling up with Vern Harnish's group as well. And when I say they weren't cheap, they were
Yeah.
an inexpensive investment, not an expense. Because I can today talk about how do we scale to 1,500 units and how that managed right. We teach the systems and the processes. It's a lot easier when you start your first property. You need a property log. You create a certain type of KPIs. It's very easy on the first or second deal. But as you start adding more units and start lessening your bandwidth,
Mm.
you're really going to have to, I mean, there's no other way. You've never done it before. I never scaled a company before to 2,000 units. So I needed someone to teach me. I didn't have core values. I didn't have a mission statement. I didn't know what Rockefeller habits were, net promoter scores, on and on and on. And that's one of the things when you'd mention about scaling. Scaling is wonderful. You just have to turn into a different person. The I'm a mentality of I'm going to do this and I'm going to do that works really good for Jake and Gino up at 200 units. But after this, Ima gets burned out and Ima better go look for some help. And there's so many solutions nowadays. There's virtual assistant companies out there. There's a company called Scale Virtually. His name is Sean. He has virtual assistants to help with property management. If you want to build your own, there's so many different solutions out there. But if you're serious about building, implementing, putting in key performance indicators, knowing what that looks like, go out and find a company that's doing it. Shorten the learning curve. You're either going to learn on the street or in the classroom. I've learned on the street. It's cost me a ton of money. And I learned in the classroom. It's also cost me a ton of money. But learning in the classroom, it's a lot quicker and it is a lot cheaper. And I learned the right knowledge. So to your property management specifically, what type of asset are you trying to invest in? If it's single families, go look for a property management company that deals with single family with that type of asset. If you're getting into your first or second deal, don't go look for a company that manages 50,000 units. You're going to get lost in the mix. Ask your property management, ask your real estate broker to go out and recommend smaller property management companies. And you know what? Maybe do your first or second one by yourself. Maybe you work for 3 or 4 months. See how difficult it is. One of two solutions may happen. You may love it like Jake did and continue along, or you may hate it, realize that you weren't built for that and look for a partner who does that or look for third party who does that. But you have at least been in the business long enough to understand the mistakes you've made and at least can set some type of expectations with that third party property management.
Yeah, that's hugely valuable here. And I want to talk about scaling your business. But first, because it came up organically in this conversation just now, I want to talk a little bit about mindset. I want to save that a little bit towards the end, but I want to talk about it now because you made a very important distinction. You said, I think of it as an investment as opposed to an expense. And as real estate investors, there's a lot of different things we go through that we have to create that mindset of, hey,
Mhm.
this is an investment. It's not like when I hire folks for coaching or when I sign up for a mastermind, right, which are can be expensive. I don't look at that as an expense. I look at that as an investment in myself to get more educated, to have a broader network of folks who are operating already at the level I either am or want to be. How important it is the mindset, getting the right mindset, creating the right mindset for the real estate investor.
In 2007, my father passed away from the restaurant, and I had been working with him since I was 7 years old. And I was at crossroads. I said to myself, am I living his dream or am I living my dream? And 2008 came and everyone got crushed. I wasn't making as much money and I was blaming everybody. I was blaming the economy. I was blaming myself. I was blaming Bush, Obama. And I looked at the bookshelf and I saw this book called Secrets of the Millionaire Mind by T. Harv Eker. And that completely changed my life. I read it the first time. I really wanted to punch T. Harv. I really hated his guts. Really. I really despised what he was saying. But then when I read it the second time and he said, your fruits are in your roots. My roots were shallow. My roots sucked. What you're seeing is on the outside is all the hard work, all the fruits that you put into. And we don't focus on the roots. And for me, it was mindset. And all of a sudden, once I took from that book, my financial blueprint, the responsibility, stop blaming others. It's all about me. It's about long-termism. It's about commitment. It's about dedication. It's about hard work. It's about investing in yourself. Everything changed after I read that book. Now, did I become an instant overnight success? No. But what I did do is I joined the mentorship groups. And when I met Jake in 2009, I was prepared. Was I lucky that I met him? Well, if I'd met him and I wasn't prepared, nothing would have happened. But I was ready at that point in time. And that's when everything changed for me. And for myself, reading that book, everything leading up to 2008 was all my fruits. The lack of skills, the lack of value that I added to others, it was my fault because I didn't have the roots. And then I started immersing myself. I always say your input equals your output. If you think about it, everything that you take into yourself, the output that comes out is what's going into you. And for me, my inputs early on were not good. Then listening to Ziegler, listening to Jim Rome, listening to Tony Robbins, listening to T. Harv Eker, getting all the mentorships, all of a sudden my inputs became a little bit different. And you'd mentioned going to these events and networking. All of a sudden, my inputs are a little bit different. All of a sudden, my output starts changing. I think mindset is everything. And understanding your relationship to money is the key. Just because Tony is dirty boots capital and he's blue collar, we call it blue collar work ethic. He may have a certain relationship with money. It may be scarcity, it may not. But every time somebody talks about blue collar, they always think about money in a different light than people who are wealthy. It's not anything other than a mindset. I know people who make seven figures who are poor mindsets because they live paycheck to paycheck and they don't understand how to create wealth. They have different habits than the wealthy mindset does. And if you can understand to embody the habits of the wealthy who have that mindset, it may take time and it will take time, but those little habits day over day will compound into something truly magical. You'll look back 5 years from now and go, I can't believe I was that person. And that's what we want to be in life. If you're looking back 10 years ago and you're not a little embarrassed of what you were thinking and you're not a little embarrassed of, what you believed, then you should be ashamed of yourself. I'm sorry to say, but 10 years ago, I was the pizza guy who thought that money was scarce, who didn't even know where to start in business. I had one stream of revenue. Everything was everyone else's fault. And now 10 years later, I can sit here and go, well, it's been a struggle. It's been a journey. My relationship with money is still evolving. I still have blocks with money, but understanding that it's great. And 5 years from now, I'm hoping I'm even light years ahead of where I am from now. But it all comes from really working on your mindset and working with others. The other book I would recommend is Mindset by Carol Dweck. That fixed mindset versus the growth mindset. Read that book. That book will change everything. If you've got that growth mindset, you're willing to make mistakes. You're willing to humble yourself. You're willing to learn from others. And you're willing to know that your traits that you're born with are not fixed. You are able to learn whatever you want to if you dedicate enough time and they align with your values and you're able to work on them and dedicate the time, you can achieve almost anything.
I love it. The mindset, sometimes we as real estate investors, we become a little philosophical about life and about ourselves. And we really do start to think differently than others because we really do have these reflections on our lives and we say, what was I doing? What was I really doing 10 years ago? What type of person, what type of man, what type of husband, what type of
Mhm.
wife, what type of, neighbor, right? We start to really reflect and say, is that really the person I want to be? Right.
Mhm.
And so to really have this epiphany to say, mindset is a big piece of this, a huge piece of this, to be able to say, what are my values? And what
Mhm.
is my value? to
Hmm.
an organization, or to my business partner, or to my life partner, right? What is my value to that,
Hmm.
it's important to go through. And part of, investing in some of these groups, of whether it's a mastermind or something like that, everybody's going through these same examples that I'm sharing. We all have our struggles. None of us, came into this world having all the answers. I still struggle with things. I call people, I talk to, I have awesome people in my network, because I get out there outside of my extroverted, introverted self, and I have conversations, and I have an awesome network to be able to have these conversations and try to think different, get educated different, right?
Hmm.
Not try to learn everything and reinvent everything my own. Let me learn. Let me learn from Gino, right? Let me give Gino a call. Let me go to his training. Let me see him in a seminar. Let me learn from that, as opposed to having to learn that on my own. How hard and how
Hmm.
gudgy is that? I don't want
Hmm.
that, right?
Hmm.
So that's super important. So, okay, we
Tony,
spoke a little.
what I would
Yeah,
say real quick to that, as I get older, it appears that I have less and less answers. And that's what growth is all about. When you're younger, you think you know it all.
yeah,
And then you start reflecting on your life. And that's part of the beauty of the growth is you start to know that there's a lot that you don't know and you're comfortable with that. And you just start asking more questions as you get older. And one last piece with the values. If you really don't know values, you don't know really how to pick what your values are. I would say, think about three words that really want to define you. Three words that come to you right away. For me, it was dedication, commitment, and hard work. I think I got those values when I was young from my father, going to work with him every day. Those are my three values, and I live by them. So if I'm committed to something and I'm a hard worker and then I want to give up so easily, it's not going to happen. It's not in alignment. It's not who I am. So if you can understand what your values are and you can live by your values, it's a lot easier to make decisions and not to quit on a certain project because it's not going the right way, because that's not in alignment with my values. I'm going to be dedicated to this. I'm going to be committed, and I'm going to be a hard worker. So as you're listening to this and you sign off and you're just relaxing for a few minutes, ponder and stop and think, what are the three words that you want to define? And then once you've had those three words, start to live your values through those three words.
that's excellent advice. I definitely want to double back. I so appreciate having you here, Gino. I really do, because this is huge value for the audience and for the listeners. But one of the biggest questions I get is how to scale. And I know there's a lot of whys. How is it really the path you want to take? And you really have to internalize that and understand really what you are, what you're chasing. And does it, conflict with your why, or maybe it aligns with your why? Maybe. But in terms of scaling, like, so many times I get the question of, okay, so I bought my first one or my second one, but now I'm tapped out. I don't have any more equity to give. In today's environment, what do you see as some different, ways people can scale their multifamily business?
Once again, I'm going to point you to a book called Small Giants. I interviewed them, Bo Burlingham and Paul Spiegelman. They have a small giant community. And for Jake and myself, we could have scaled to 5, 6, 7,000 units. That wasn't in alignment with what we wanted. We wanted something called PPU, which is profit per unit. If you're a syndication company and you're raising equity and you don't have as much of the deal, well, the profit per unit for yourself is going to be less. So that was our values. That was our goals. We needed the syndication in the middle of our journey because we just ran out of money. And then once we had that capital and we continued to place it, we just decided, hey, we're going to scale, but we're going to scale at a 20% growth rate. That's what we're looking for. First question you need to ask yourself, why do you want to scale? Is it just a sexy thing online where you're seeing people do thousands of units and you see Cody Sanchez buying businesses and doing all this? Do you need to do that? Is that going to make you happy? Why do you want to scale? Understanding that is so important. And for me, early on, I just thought, hey, I need to get to 1,000 units. I'll be happy at 1,000 units. Well, guess what? I got to 1,000 units. I wasn't happy at 1,000 units. When I get to 1,500 units, I'm going to be really happy. Well, I'm at 1,700. My happiness level hasn't changed as far as scaling goes.
Yeah.
Scaling right now in this environment, we've been able to refinance out over $25 million out of our portfolio and been able to roll it in. If you're in a corporate job or you're starting out early, the best way to scale in multifamily is to reinvest all the profits that you make into the next deal and continue to do that. We call it our conveyor belt theory, where you're buying assets on an imaginary conveyor belt. You're stacking that belt. Year one, you buy one deal. Year two, you buy another deal. Then by year three, that deal you bought in the first year, you're either going to sell it, pull the equity out, or you're going to refinance, because you only make money in real estate when you sell. You make when you buy a little bit of cash cash flow, but that equity, whether it's a sale or a refi, is going to make you the money. So your goal is to put really good assets on this conveyor belt, let that equity matriculate, and pull it out. I was talking to Kim Taylor, a securities attorney, yesterday, and what she says some syndicators do is they buy a deal, they'll buy that asset, then they'll 1031 that asset into the next asset. Some with the entire group. Some of the LPs want to stay in, some don't. You buy the ones that don't stay in, you 1031 into the next deal. And by the time you've done that 3 or 4 times, all of a sudden you're getting more parts of the GP and you have less limited partners. What a phenomenal way to scale an asset from a 30 unit to a 200 unit. Now, does it take time? It may take you 4, 5, 6
Sure.
years.
Sure.
But come on, for the next 5
Yeah.
years, if I said you do that stuff for the next 5 years, you're financially free, who wouldn't take that? We overestimate what we can do in 1 year, and we vastly underestimate what we can do in 5 years. There's a plan out there. There's so many ways to do it.
Yeah.
Buy the assets, and that refi, you're not refining right now, but in the next 2, 3 years, rates will come back down. You'll be able to refinance, be able to sell those assets that you bought, the onesies and the twosies, and say, you know what, I've outgrown this asset. Let me go buy a 10 unit. You sell the 2 unit, you roll that money into a bigger asset.
Yeah, beautiful. I love it. I'm thinking about selling. I have a standalone condo down in Florida. I'm on the Gulf Coast. You're on the
Ah,
East Coast. So
yes.
I'm thinking about selling that asset, and I'm thinking about doing seller financing. Right. I want to hold a note. I make.
Yes. Mailbox money, my
So
friend.
so
Yes,
here
that is
here's
true mailbox money.
here's the interesting thing, right? So I can seller finance that, and I can walk away with the down payment that they pay me, and now I can take that money and go invest it in another deal. Okay, great. But the funny thing is, I was doing some math the other day, and I'm like, every year I make about 7,500 on that condo, that one condo, 7,500. I did the math for the seller financing. I'll make almost 10 grand a year doing seller
Doing
financing.
and
So
doing
I'm like,
nothing. It's yes, yes, yes,
if they screw
yes,
up and they don't make the payments, I own it again. Okay, great. If they do
yes.
make the payments, I'm getting more money than I was renting. So to your point of there's so many different ways to make money in real estate. It is crazy. We could talk, you and I can talk hours about this sort of
Yes.
stuff. And
Yes.
to scale, you know, uh, again, I go back to, and you mentioned it as well. Yeah, partner, if you're tapped out and you ran out of cash and you're not ready to sell your building or do, seller financing or something, to create more cash for yourself, right? We don't want you getting a second job, right? Working at Kentucky Fried Chicken or working a second job. I mean, that's just, trading your time for money, which we don't want you to do. We want to create more freedom for yourself, more freedom of time to do what you want to do when you want to do it. So,
Mhm.
partner, JV with somebody who does have that money. There's so many different ways to be able to get the equity that you need to be able to go purchase your next deal. So
Mhm.
this has been great. You've recommended a lot of great books. I'm going to make sure we capture that in the show notes. Amazing. Gino, thank you so much for your time. Where can people find you, learn more about the coaching program that you offer? How can people reach out to you? Share a little bit with us.
Just go to jakeandgino.com. You'll see all the information there. We're actually launching a product for limited partners. If you want to invest passively in real estate, in any type of real estate, I think the limited partner needs to understand how to run the business as an active person, learning how to vet sponsors, learning how to underwrite deals, learning how to select the market, learning fees, structures, all of that's so crucial. But what a great way to take earned income and put it into one of the best, income producing vehicles and wealth generating vehicles you'll ever run into.
Amazing, Gino. Thank you so much. For the listeners, for the viewers, please go look up Gino, see all the great things he's doing. Follow him on social media. I do. It's amazing what he shares. So, Gino, thanks again for being with us here today. We so value your time. Thank you.
Thanks, Tony. Have a great day.